Hi grade 11 student. So in this video I'm going to do the whole question paper, which I combine 3 different papers from different provinces, so that guys I can be able to cover all 9 provinces that we have in South Africa. So what I did guys is that I did part 1 for everyone, whether you subscribe to this channel or you didn't subscribe, or whether you are a member of this channel or not, everyone will be able to see this video. However guys, there is a part 2 that I did, which only my subscribers will be able to watch them. If you go to playlist, you are not going to find it if you didn't subscribe in the previous 1 hour. Okay, which means that you have to subscribe now and check again later on. You will find part 2 of this video, as well as part 3 guys, which I did it for my membership. Remember, to subscribe is free, but membership you have to pay. It's either you choose 19 rand or you choose 9 rand. All of them you will be able to see part 3 and 4. So which means that we are going to do 4 different question papers for paper 1, and we also do 4 different papers for paper 2, so that guys, when you go and write your exam, you will be very ready. Guys, it's not easy to record a long video like this. You will see some other questions I did it on the other days and I combined them. So you need to appreciate our work that we are doing by subscribing. You can join extra classes that we have. You can also join a membership. We can appreciate that. Okay, so before we start with the first question, let's first check these 3 papers that I have for this one, and for part 2 you will see the other one. Okay, you can see the topics that are available for paper 1. Number 1, we have a question paper which have accounting equation and fixed assets. For question 1, we have a statement of comprehensive income, which is income statement. We have balance sheet and notes and financial indicators. So those are the chapters for paper 1. Okay, but let's look at the other question papers, what they did. They said, okay, question 1 is going to contain gap principle and fixed assets notes, and the question 2 is going to be income statement, question 3 balance sheet, question 4 analysis and interpretation. Okay, now if you check the last one, we have a fixed assets and internal control, income statement. We have a partnership. Guys, when they said partnership, just think about anything. Like a balance sheet can be there, a note, a current asset note can be there, and so on and so on. Then financial indicators, they are there. So if you check all of them, these 3 question papers, a fixed asset is always there on question 1, which means that you must watch more videos for fixed assets, because I did them, and I did them for part 2, part 3 and part 4 as well for examination. And also analysis and interpretation ratios, guys, they are always there. Okay, so even income statement is always there, which means that automatically, guys, you know what is coming. All that you need to do is to practice more question papers that are going to help you to figure out different tricks that they can set. Okay, what else? The balance sheet as well, né? And the issue of partnership, I already specified that it can be income statement, balance sheet and a note. All right, so now let's go to question 1 for this paper, and after that we're gonna go to the different papers and do different questions in only one video for this part 1. Okay, the question was said, it was question 1 in this question paper. Okay, so actually it was a one word, 1.1.2, 1.1.3, 1.1.4 and 1.1.5. So basically they said fill in the missing word and write only the correct word next to the question, 1.1 up to 1.5. Okay, number one, they said is the remaining value of the assets after it has been fully depreciated. They want us, what do we call that value that after assets depreciated at the end of the useful life? What do we call it? Residual value. We call it residual value. Okay, the next one, they said is a set of principles according to which financial statements are prepared. Which principle have you done in grade 10 and 11? It's only one in accounting. GAAP principle. You only do GAAP principle in grade 10 and 11. GAAP principle is the answer. Okay, 1.1.3. And the principle states that all income and expense incurred must be shown in the same financial period. All right. In this case, we have to specify the principle that states that all income and expense must be recorded in their financial year. This is one of the GAAP principles that we apply under income statement. It's a matching concept. A matching concept. Okay. Then the next one is imputed expense. Which expense, whether we like it or not, we must calculate it. It's a depreciation. Guys, remember, once you bought a vehicle, whether you are using it or not, it's going to depreciate. So it's depreciation. Guys, remember, this is question 1, which contain GAAP and fixed assets notes, which means that the one words that we have to think about, it must be from a fixed asset and GAAP principle. Once you write something that is related to partnership on question 1, something is wrong, which means that you were not ready for the test. Okay, now the last one, they said is a negative asset. A negative asset is when we subtract. The value that we subtract under asset is only accumulated depreciation. Accumulated depreciation. So this is how you should tackle this question. So please, guys, make sure that you revise this fixed assets notes on part 2 and part 3. Okay, and also, guys, before we go to the next question, those who want to join our extra class, please make sure that you come on time so that we can add you. Is only 100 Rand per month. So come in time and join us. And those who would like to join us for grade 12, please just know that we are going to start on 4 of January, which means that January we are going to start immediately so that we can cover everything in time, so that when you go to grade 12, when you start with your term 1, you are not going to have a pressure because we will be already in advance. Okay, now let's go to the next question. Let's check the question paper that we have. The required part, they said that prepare the statement of comprehensive income, which is also known as income statement, for the year ending 30 June 2022. So it's very important to know your reporting period so that you will be able to calculate a month, because the major principle under income statement is that you need to record a transaction for 12 months. Every transaction must contain 12 months. If they give you the transaction for next year, you have to remove it. If they give you a 10 months transaction, you have to add 2 to make it 12. That's the major principle that you need to know under income statement. You're gonna see it when we do a transaction. Okay, let's start with the part of sales. They give us a list of balance, and we also have to read additional information. Okay, before we go to additional information, we have to open a bracket and write our sales amount of 1,032,000, and we check if we have any return. any return is called debtors allowance. We have to subtract it under sales because those customers have returned goods. We can't say that we have a sales. We have to do what? To remove it because it's no longer sales. They return the goods. Okay, we have it, debtors allowance of 32,000. Okay, then after that we have to check additional information. Obviously I'm just gonna point additional information related to sales so that we can proceed quick. Additional information number 2.3. A credit note of 225 issued on 30 August 2021 to Moti has not been recorded. The stock was returned by Moti because of the wrong color t-shirt was sent to him. So this customer said we sent the wrong color of t-shirt, which means that that's the reason why the customer returned the goods, which means that it's no longer sales. That 225 is no longer sales. We have to subtract it. Okay, which means that now we can close the balance. But you have to make sure that if you are writing examination, read all transaction and check if there is any other transaction related to sales. Okay. Then if you calculate, you're gonna get 999775. Okay, and we open brackets for cost of sales. This transaction is going to affect the cost of sales as well. Okay, the first cost of sales that we have is from our balance, which is 427,000. Okay, now the question is, how much are we going to subtract? This one, no, this one is on selling price and we need to convert it to cost price. Okay, it's on selling price 225. Okay, if you read, they said that the markup on cost under 2.3, the markup on cost, it was 50%, which means that we have to say 225 multiplied by, we're looking for 100 out of 150, then it's gonna give you 150. Okay, then you calculate your balance. It's gonna give you 426,850. I'm sure that you are aware that cost of sales, obviously we have to write it with brackets. You take this one minus this one and you get your gross profit, which is amount of 572,925. Okay, you also have to be careful, guys, when you are listening, because the major purpose is to listen very carefully so that you will understand the principle. Because as you can see, we have a lot of expenses, which means that some of the amount that I'm going to write, they are not going to be exactly in the same line. But if you just listen what I'm saying or the principle, you will get it right. Don't just copy. Okay, let's proceed. Now, the next step, we have to go and check our other income. Okay, we got our gross profit is fine. Then now we have to check other operating income. We have rent income. Okay, rent income, the first one we must start with the one that has been given under a balance, which is 47,250, and we check transaction. Okay, transaction number 2.5. A rent income includes the rent received until July. Remember, our year is ending June. We receive a rent for next month, for next year. Okay, in other words, we receive rent in advance in 1 month. Okay, but let's proceed. They say that the monthly rent was increased by 10% with effect from 28 February. They say that during the year, rent is increased by the percentage. Now you are going to use the formula that you need to understand it very careful. What you are going to do with this formula, you have to do it according to the way that I'm going to do it. Otherwise, you are going to do it wrong. The first step, you have to split a month, which is called before and after. Then after that, you are going to open a bracket and say this side is always 100 and this side is also always 100, but you have to add with what? The percentage of increase, which means that it's going to be 110. We'll close the bracket. Months before and months after increase. Months before increase, how many? Okay, remember it has increased on February, 28 February, which means that the effect starts from March, because it was month end 28 February. It's going to be March, April, May, June. We count until July because it has been paid until July, not June, which means that it's 5. It's 5. Remember, in total, it must be 13. Why 13? Because there is 1 month in advance, which means that they didn't pay for 12 months, according to what we said when we start here, that the principal said you have to record 12. They recorded 13. 13 minus 5 is going to give you 8, which means that before is 8. If you count from beginning of the year, which is 1 July last year, until 28 February, it's going to give you 8, which means that this formula, please write it as it is. Don't say 13 open brackets and you write this. You are going to get it wrong. Do it like this. I know that 8 plus 5 is 13, but do it like this. Okay. If you do this, you're going to get 13,5. So this is 13,5 is the one that you are going to take this amount. Okay. I think now you understand this part. I can wrap because we don't have a space. You can say 47,250 divided by 13,5. It's going to give you, let me calculate, a rent before increase. 47,250 divided by 13,5. Okay. 47,250,000 is going to give you 3,500. And now you have to apply what? An increase. How do you apply increase? Now it's very simple. 3,500 multiplied by 110 over 100. Or you can just say 10% first and you get the answer. Okay, then you add it back again. Okay, now if you do this calculation, guys, you're going to get that month of July after. Remember, July is a month after increase, which means that it's going to give you 3,850. This is after you have you calculated 3,500 multiplied by 110 over 100. You're gonna get this. Okay, then it gave you 4,400. I hope you understand this long transaction. So this transaction there was a 2 marks allocation here, 1 here, 1 here. It's almost 4 marks. It's a lot. Okay, let's proceed. Then the next one under other income, so that we can finish this part, we have bad debts recovered. Bad debts recovered is income. If you check under our table, we have bad debts recovered of 1,000. And if you check additional information number 2.7, Bobby Lewis, a debtor whose account is previously written off, deposited. Okay, this one is bad debts recovered. Yes, the debtor that was previously written off, that person come back and do what? In the deposit amount of 210, which means that we recover 210. Okay, then we're gonna now write a total of 1,210. Okay, and the next one we also have what we call provision for bad debts adjustment. It was transaction number 2.9. The provision for bad debts must be decreased. If it decreases, simple means that when we said provision for bad debts, there are those that we are doubting. We are doubting that they are going to do what? To pay us. So in other words, if they decrease, those people that we are doubting, which means that more people are going to pay. But if it increases, it's going to be expensive because more people, we are doubting them that they are going to pay us. That's why it's going to be regarded as a what? As an income, because it has decreased. Those number has decreased, which means that many are going to pay us. Okay, then now we can calculate the total. It's gonna give you amount of 49,010. Okay, now we can calculate our gross operating income. How do we calculate it? Okay, it's just gonna be this one. We take gross profit plus other income, which is going to give us 621,935. Okay, then now we are going to the next step. Okay, let me shift a camera. Okay, because we have a part of profit for the year, it must be shown this side. Okay, now let's start. The first three expenses, like salaries, discount received, and sundry expenses, there was no transaction, and they decided that they are not going to give a marks for this because it was there on your answer book. Okay, then we have the next one. The next one we have water and electricity. Okay, I'm doing so, guys, because I don't want to jump anything, so let me try to do them in order. Water and electricity, the first step, we have to open a bracket and take the one that we have under a transaction, under the balances. Okay, the one that we have is 25,000. Okay, then under transaction, we have to check transaction number 2.11. Water and electricity account for June. June is our year. It has been received. We received water and electricity, but we didn't pay. We have to edit. Why edit? In other words, it's how much? It's 5,000. In other words, they are saying that this has been paid until May. June they didn't pay, and remember, we can't record 11 months, we must record 12. That's why we edit. Okay, and now we get the balance of 30,000. Very simple. Okay, the next one is insurance. We open a bracket and we take the one on the balance. Insurance is 6,400 under trial balance. Then after that we look for transaction. Transaction number 2.4. Included in the insurance amount is annual premium of 2,400 paid for the period of 1 January 2022 until December. It was paid from January until December, and our period is ending June, which means that only amount that is applicable here is a half, because it's from January until June. From July until December is another reporting period, which means that 2,400, half of it we have to subtract it, which is how much? Half of 2,400 is 1,200. Okay, then you will get amount of 5,200. Okay, you also have to recalculate so that you will get the correct figure, because I'm just copying my workings here, because I can't keep recalculating everything on the video. It's gonna play for 3 hours, which is not good. Okay, now let's proceed. The next one, we have a packing material. But before we go to packing material, guys, please, those who want to join our extra class is still available. And because I know that in South Africa, a lot of people, they don't have money, I decided that we have to do a tutorial that everyone will be able to afford. So myself and the team of Accounting Solution SA, we decided that we're gonna only charge a student 60 Rand per month. So make sure that you join our classes before it's too late, because if you text us a day before the exam or day before the test, how are we going to assist you in that case? Even if you make a payment, how are we going to assist you? So make sure that you join in time so that you will be able to learn with others as well. Okay, now let's proceed. We are going to packing material. Packing material, let's start with the one that we have on the table. We have 4,200. 4,200, and the next one, we need to check transaction 2.1. They say packing material of 500 purchased on 21 August was incorrectly posted to the stationery account. In other words, they took 500 of packing material and they recorded it under what? Stationery, which means that we have to come and edit under stationery 500. Under packing material we are adding, then under stationery we will go and subtract 500 because it does not belong to stationery, it belongs to packing material. Packing material purchased was incorrectly posted under stationery. That's why we subtract here and edit here. Very simple. And now before we proceed, packing material we have 2.2. We have packing material on hand of 900 under 2.2, which we have to subtract. Every on hand which is at the end we subtract. At the beginning we add. Okay, 900. Okay, then it's gonna give us 3,800. Then the next one, stationery, we have 4,100 this side from our table. Okay, if you check on our balances, it's 4,100. Then we minus 500. Then we're gonna get amount of 3,600, just like that. Okay, and now the next one we have embedded. The first one, you take the one on the table, which is amount of 1,500, and we check if we have any embedded adjustment. Okay, transaction number 2.8. According to Ronaldo, a data of 450 must be written off as it came to light that he has left the country to play soccer in France. So this guy is no longer coming back. Ronaldo is in France, so obviously we won't be able to find him again. So this 450 must be regarded as a what? As a bad debt. Okay, it's gonna give us 1,950. Okay, let's proceed. The next one, if you check under transaction, we did all the transaction beside transaction of interest and depreciation. So bank charges, it does not have any transaction. So bank charges, we're just gonna copy it as it is. Bank charges is how much? Is 840. Okay, and the other one, we're gonna go to depreciation 2.12. Depreciation calculated for the year was 27,470. Depreciation is an expense. Okay, 27,470. Okay, and another one, we have to work out if we have any trading stock deficit. We compare the one for beginning and the one for the end. If it has decreased, there is a deficit. At the beginning we have amount of 81,000, and remember we must first add the one that customer has returned because it's costed us, of course, 150. Then after that, I think these two, if we add them together, 1,000, then we compare it with the balance at the end. Transaction number 1.2.2, trading stock of 79,000 at the end, 100. If you compare this one two and with this one, obviously you can see that it has decreased. Decrease simply means that it has lost to value. That's why we call deficit. If it has increased, it was going to be surplus. Okay, but you will find a deficit case always. All right, then it's gonna give you a amount of 2050. Okay, then after that we can now calculate operating profit. You take total of expenses. Total expense is how much? 281,100, and you add with what? With income. Oh, sorry, this one you subtract. Then it's gonna give you operating profit of how much? operating profit of 340,825. Okay, let me see if you can be able to see. Yes. All right. Now let's check. The next one, now we have to calculate interest income. Interest income, they say that we have amount of 500, the first one. And the transaction, they said that sum of interest of fixed deposit is outstanding. Interest is not capitalized. If you take amount of 12,000 under fixed deposit of 12,500 and you multiply by 8%, it's gonna give you 1,000, which means that this 500 is not enough. From 1,000 total, we must add 500 so that it can give you. That's why they say that sum is not capitalized. They only recorded for half of the year. The other one we have to record. Profit before tax, we just take this one plus this one. It's gonna give you 341,850. Okay, then interest expense. Let's calculate interest expense. The first one we are given 360, and the other one we have to calculate according to the table that we are given. 2.6, you take opening balance and you subtract the rest. You say 42,875 minus 10,000 minus 40,000 is gonna give you plus 7,125. Okay, then after that it's gonna give you 7,485. Okay, then after that now you have to subtract, because this one is an expense. Then you will get profit of the year of 334,340. So we have been given information, and after that they also give us a required. So without wasting more time, guys, let's start with our 5.1. Our 5.1, they said that we have to calculate acid test ratio. Okay, when we calculate acid test ratio, obviously the first step is to lay down the formula. The formula said our current assets minus inventory is to current liability. Okay, so in other words, guys, when we are doing acid test ratio, we want to see if the company will be able to pay what a short term. When we talk about a current asset and current liability, we're talking about a short asset or a short-term liability. So we want to see if we will be able to cover our short-term liabilities with the our current assets that we have that does not have what? Inventory. In other words, this formula assumes that inventory is acid. For example, if you are a business that is selling a bread can expire anytime. So in other words, we want to see if we don't have those bread, are we going to manage to pay our liability? So the norm for this formula is 1:1. The minimum must be, this side must be the same with this side, so that this side must be able to pay the liability. Okay, so now let's check with the information that we have so that we can do calculation. So if you check on the table, we have debtors, which is current assets. We also have inventory, which is a current asset. We have a bank, we have petty cash, and we have cash float. Okay, so you need to add all of them and then you subtract inventory. Even inventory, you have to add it first so that you can also do what? Subtract it. Otherwise, you will not be using a formula if you didn't add inventory. Okay, let me show you here. It's 220, 800 plus 151, 200 plus 40,000 plus 5,000 plus 2,500. You have to add all these, then Now when it comes to this side of current liability, we only have 77,000. That's the only current liability that we have. Okay, then remember, after you add this, you have to subtract what? Inventory. Okay, then if you add all this, you are going to get amount of 268,300. Then you minus inventory now, 151,200, and it's 277,000. Okay, and you will get, okay, apology, this should be 419,500 minus this one, then you will get 268,300 is 277,000. Okay, then after that you said this one divided by this one, it will going to give you, this side is always 1, and you said this one divided by this one, you're gonna get amount of 348 is to 1. So now it's time to comment. What do you think? Is it good or bad? Obviously this is very good, guys, because our assets is more greater than liability by 3.48 times, which means that our comment, we are going to say business has good acid test ratio. Then you can also just point that because the norm is 1:1 and the result is 3.48. Okay, then the next one, they said that we have to calculate average collection period for data. Okay, 5.2, average collection period for debtors. Okay, we also have for creditors now, but we are going to do for debtors. So what does this formula mean, or what does this ratio mean? This ratio simply means that we want to see how many days do we take to collect our money from the people or from the customers who purchase to us on credit. Remember, it's not everyone who purchase in terms of cash. Some of them, they come to us and borrow. Some of them, they pay late. Some of them, they pay early. Some of them, they just pay within a month. So this formula is going to show all this, those days. Okay, so the formula said average data divided by credit sales multiplied by 365. Okay, when they said average data, they simply means that add the amount of last year and this year and divide by 2. That's what we call average. We can't say average if you are talking about one balance. Okay, let's take the data of last year and this year. Data of last year, it was 158,000, and for this year plus 220,800. Add this together and divide them by 2 before you proceed. Then now let's go to credit sales. Credit sales, we have our sales amount, and in brackets they say that 60% is on credit, which means that we take our sales of 2017, because we're calculating the ratio for 2017. They say that it's 60%, which means that 60% of 1,980,000 multiplied by 60% is gonna give us a credit sales. Okay, if you do these calculations, you are going to get amount of 1188,000 multiplied by 365. So it's best for you to add these 2 together and divide by 2 and get answer and put it here. Then you can punch into your calculator so that you can get a correct result. So it will give you 58,19. This is days. In other words, we take 58 days to collect money from our debtors. So is it good or bad? In other business is good, in other business is bad. But in this case, we can just assume that a norm, because they didn't specify on the information. Okay, number 3, they say business granted 2 months credit to creditors. In other words, our creditors give us 60 days to do what? To pay a debt. So which means that we collect within 60 days to our customer, which means that now this is good, because if we can collect to these people within 60 days, we have money to do what? To pay our supplier. But if our supplier said they collect within 30 days, and now as we collect in 58 days, it's very bad, because we won't have money to do what? To pay our supplier. So this is good. This is good ratio. Okay, then the next one is gross profit percentage on turnover. Okay, we need to calculate this one. Okay, it's 5.3. 5.3, they say that we need to 5.3, we need to calculate gross profit on sales or on turnover is the same, guys. Once you have formula that have the words on, guys, this one, there's no need for you to even cram the formula, because what they are saying, take this amount and divide by this one, multiply by 100. Very simple. All profitability formula, they are just like that. So in other words, it's a gross profit divided by sales, multiply by 100. Once you see the words on, guys, you are going to kill it. Okay, let's take gross profit. Gross profit is amount of 1,775,600. Then we divide by amount of sales of 1,980,000, and we multiply by 100. So if you calculate it like this, you're gonna get amount of 89.68%. Is it good or bad? This is very, very, very good. The reason is because, remember, they said the business maintains 70% gross profit markup. Now we got 89, which means that we got higher than the maintenance of 70%. So your comment is going to be very good. Okay, 5.4, stock turnover rate. Stock turnover rate. How many times do we turn our inventory? Okay, in other words, you know that maybe we can order a stock today and sell it within a month, which means that if we sell it within a month, it's possible that we can stock 2 times in a month. So that's what we are going to see in this calculation. How many times? Okay, they said that additional information number 1, they say that the stock turnover rate to other business that are selling same item with us, okay, is 3 times per year. So now we want to see in our business how many times. Okay, so the formula said cost of sales divided by average stock. Once you see the words average, guys, add balance of last year and this year and divide them by 2. Very simple. There's no multiply by 100 here, guys, because we are looking for times. How many times, not percentage. Okay, our cost of sales is 204,400. Okay, and then average stock for last year is 188,000, and for this year is 151,200. Add them together and divide by 2. Okay, then if you first add these 2 and divide by 2, and you say this one divide by the answer that you got, you will get amount of 1,28 times. Is it good or bad? This is very bad, guys. In other words, we stock only 1.28 times in for the whole year. Imagine other business that are selling the same good with us, they're stocking 3 times. So obviously there is something wrong in our business. It's either we are charging too much price, our gross profit percentage is too high. It's either we are charging too much price, or I don't know. It can be a lot of reasons why people are not coming to buy to us than compared to other businesses. It's either or we're not doing advert or something like that. Okay, then the last one, current ratio 5.5. Current ratio, guys, is similar with the first one that we did, because it's current asset is to current liability, and we already calculated a total of current assets by adding all those items except creditors. Okay, it's gonna be 419,500 is to 77,000. Okay, and the answer for this one is gonna be 5.45 is to 1. You take this one divided by this one, is give you 1. This one divided by this one is give you this one. So what about the comment for this one? Obviously this norm, guys, the norm is 2:1, so it's more than the norm because it's 5.45 is to 1. It's a way, it's more like it's a double. We have more assets compared to what, to liability, which means that this ratio look very good. So thank you so much for watching, guys. Please don't forget to subscribe. Now let's look at the question paper that we have. So this question paper is basically the question paper of 2023. So it was June examination, which was written in the province of Limpopo. Okay, make sure that you also go and check the other videos of other provinces. Okay, 3.1, it was question 3. They said that this company is TT Brothers, and they said T Thomas and T Titus are partners in this business. Okay, and they said the financial year end 30 September 2022. Okay, 3.1.1, 19 marks, the one that we are going to do. They said complete the current account note for financial year end 30 September 2022. So you need to check the comment section if you want to watch the 3.1.2 of a balance sheet of this question. Okay, now we are given the first extract, which is from the accounting record on 30 September 2022. 30 September 2022 is our year end. Okay, now let's look at the transaction that we have so that we can start with our allocation. So remember, when we talk about a partnership, guys, it's two people that they are doing business together. So those people, obviously, they have to make agreement. How much are you going to in? How much did you contribute? And so on and so on. How much bonus are you going to in? There must be an agreement between two or more people. How much are we going to allocate each other after we got the profit? We are going to do all that on this question. Okay, number B, they said that on 31 March 2022, Titus increased his capital contribution of 50,000, and this was entered in the books. Okay, number C, remember the format, guys. They said the first one we have to do a salaries, second one interest on capital. Okay, if you check number C, they say that Titus will receive annual salary of 240,000. Remember, we record transaction of 12 months of annual for the whole year. Okay, then for Titus, it was not a problem because they give us annual amount of 240,000. But if they give you monthly, multiply by 12 so that you can get annual. Okay, and then they said Thomas received a salary of 5,000 per month more than Titus due to extra management responsibility. In other words, Thomas received 240, but with extra 5,000, which means that it's going to be 240,000 plus 5,000. They said it's more than 5,000, and this 5,000 is months. It's monthly. You have to multiply by 12. You need to get answer here and after that you add with this one, then it will give you amount of 300,000. It's gonna give you 300,000. Okay, just like that. Okay, then the next one, we have to focus on interest on capital. Let's take transaction number B. They said on 31 March 2022, Titus increased his capital contribution with 50,000, and this was entered in the books. Okay, so remember, in this case we are calculating interest, we are not recording capitals. So let's take interest on capital, number C, bullet number 1. They said interest on capital of 12% per year. Okay, let's first calculate for Thomas, because there is no any movement. So for Thomas it was 350. Okay, I'm just gonna write T here. It's 350,000, and we multiply by 12%. Then it will give us amount of 42,000. 42,000. It's gonna be 42,000. Okay, but now we have to go to Titus. So under Titus, we have to calculate an increase as well. Okay, if you check on the table, we have 450. This 450 is included the 50,000 of increase. You have to calculate 400 separate and 50,000 separate, because the other 50,000 was increased during the year, which means that we have to calculate what? A month. Okay, we are going to say 400, the first one, before increase, multiply by 12 months. This one is 12 over 12 for the whole year. Okay, it's 400,000. 400,000 multiplied by 12%. It's gonna give you 48,000, and the other 50,000 we multiply by 12%, but we need to count a month. Okay, how many months? Because they said that on March 2022, which means that we count from April, because it was 31 March. We're gonna count from April up to 30 September. It's gonna be April, May, June, July, August, September. 6 months. Multiply by 6 over 12. Okay, and it's gonna give you, let me calculate. It's gonna give you 3,000. Okay, which means that, in other words, answer will be 3,000 plus 48,000. It's gonna give you 51,000. Just like that. This is how you do increase, before increase and after increase. You have to calculate them separate, because the months are not the same. The other one is 12 over 12. The one that has been increased during the year, you have to split it. Okay, then the next part, we have to check a partner's bonus. Okay, Titus received bonus of 10% of his annual salary. Thomas does not receive any discount and any bonus. So this one is going to get what? Bonus of 10% of his annual salary. If you say this one multiplied by 10%, you're gonna get 24,000. It's gonna give you 24,000. Okay, that's how you calculate a bonus. Then primary distribution is very simple. You just calculate total of everything. Total this side is 342,000, and this side is 315,000. Okay, then now the next one is final distribution. When we talk about a final distribution, it's going to be very simple. A final distribution, we take net profit. If you check the net profit, they say that is 750,000, and we subtract these two, minus 342,000 and minus 315,000. 36,000. Okay, then the answer that you are going to get, you need to read transaction number D. Okay, not number D. We need to check the last bullet. The last bullet, they say that remaining profit are shared equally between the partner. Okay, so in other words, they are saying that the remaining, after they distribution this, the remaining profit they have to share equally. So the remaining balance that we are going to get here, we are going to get divided by 2. Then after divided by 2, then we allocate those prices, which is going to give you amount of 46,500 and 46,500. If you add these two together, it will give you the remaining balance when you subtract in this case. Okay, now the next one, a net profit for the year. Net profit for the year, you just add these two, you add these two. This side, it will give you amount of 388,500, and this side will give you 361,500. It's net profit for the year. If you add these two, they are going to give you the net profit of 750. Very simple, grade 11. So please, guys, make sure that if you want to attend our extra class, please make sure that you come in time so that we can add you to group and attend with others. So our extra class is still 60 Rand every month, guys. Just make sure that you text us on WhatsApp. When you text us on WhatsApp, you do not have to ask a lot of questions, because I have a lot of messages which I won't be able to respond all of them. Just make sure that when you text on WhatsApp, a banking detail for Accounting Solution SA, guys, they're everywhere. If you check every video, we have a banking details. So just go and check banking detail, pay 60 Rand, come on WhatsApp with a proof so that we can add you simple in a group and attend with others every weekend. So make sure that you attend in time so that we can be able to assist you in any aspect. Okay, don't come in the last minute. Okay, then let's proceed. Drawings, guys, we're just copying and pasting under our balances that we have. So for Thomas, because we don't have any transaction related to it, 345 this side, and this side is 375,000. But if we have adjustment related to drawings, we were going to adjust it. Okay, so it's just like that. Okay, now return income, you take this one, you minus this one, you take this one, you minus this one, just like that. So in this case, you are going to get amount of 43,500 for Thomas. But for this guy, Titus, he withdraw more than what he have, which means that now he left with negative. It's gonna be amount of 13,500. Okay, then after that, balance at the beginning, we check current account. Okay, if you check under Thomas, we have a debit balance of 30,000. If it's debit, guys, it has to be negative. Why? Remember, when we talk about current asset, current account, guys, we're talking about equity. Equity increase on the credit and decrease on the debit, which means that debit decrease is a minus. Okay, so the other side is a credit, which means that it's a plus of 10,500. Okay, then after that, now it's simple. You just take retaining and you subtract this one, and you're gonna get 13,500. And this side, you take negative 13,500, you add with 10,000, and it's gonna give you negative 3,000. So that's how you should conduct a current account. If you are given a question paper